Same thing with naked trading. Your psychology, you have to literally not care and just like a robot push buttons. This is how you make money naked trading. As Jeff has seen me do live before, you will see me put in a random order and then make money and then make money and make money. He's like, how on earth do you do that? Why? Because you have to have the mentality of, I do not care if I win or lose, I will just catch pips. Does that make sense? Like, you have to be super, super ruthless. You have to be super ruthless when you're trading these charts. If you're hesitating, you will never win because you will either buy late, you will sell late, or you will just miss everything. All of the people who sold here, all of the people who sold down here, that is because they are people of no action. They're people of no action. They hesitate, right? They hesitate, and those who hesitate lose. The people who bought here, they hesitated. They're like, I should have bought here, But one thing they fail to understand is that this is not scary. This is not scary if you simply look left. Because this formed, I'll try to draw it straight. This formed a simple trend line, right? The fact that this did not touch the trend, or this respected an arbitrary trend line the third time and didn't break it, that should have been the signal for buy. And then the people down here that saw that it didn't even go past that, these are the people who won. These are the people who lost. Does that make sense?
Yeah.
With naked trading, if y'all can look like gurus. Y'all can seriously look like gurus because you will learn to take advantage of entries like this. An entry, I was one of the few people who sold like in this little area right there. And that was because I was armed with the knowledge. I was armed with the knowledge of looking left. Do you see how my resistance that I drew from that weekly chart is near the point where I sold? I knew ahead of time this was a significant point because I simply looked left. This is also the same point as our Brexit high. Did anybody notice that?
No, I didn't.
Think about it. The only way gold really explodes up is if it can pass the last movement that it made. And the people who don't want gold to just go to the moon, this is obviously an important point. We had a historic event, right?
Yes.
Many years from now, guys, this is going to be looked at by Forex traders who are not us, or maybe are us. They will see this historic point, right? This was clearly a strong point of resistance because A, it coincided with an economic event, a major economic event, and B, it has respected it twice. So, it obviously coincides with, this real quick. It obviously coincides with the resistance from this point and the support from this point and the resistance. See how it hovered, how the price fought back and forth right here? This right here is why traders are getting raped today. That little area right there. Notice how the price tends to struggle. It has a hard time going past this one way, and then going down, it tends to have a hard time really passing it the next way, right? It tends to revolve around this point. So historically, this is a significant point. How ironic is it that Brexit actually made it to that exact point. How ironic is that?
Pretty wild.
If any of y'all were live trading with me during Brexit when I called the gold buy and I told you exactly when to take profit, y'all realize that was because I knew that point from the past. The minute that the buy started stalling at 1357, I told y'all to take profit immediately. And within 10 seconds, this dropped almost 400. This dropped 400 pips. I don't know if any of y'all were there for that.
No, I missed it.
What's up?
I missed it.
Oh man. But a lot of people, actually one of our students who will be starting next week, Catherine, she was there for this, and she saw when I took profit, so she can actually vouch for this. But that was the reason why I said to take profit right there, and why seconds later it fell.
Did you catch the sell on that?
What's up?
Did you catch the sell on that?
I actually did, and you know what? I told people exactly where it was going to go. I told them it was going to go to 315. Some people actually sold to my retrace point and made 400 pips and couldn't believe it. And then I gave them another signal for 160 pips, and then I gave them another signal for 40 pips. Brexit was a great day for those who were active in ads. Fundamental analysis combined with technical analysis, you can't lose. Fundamental analysis meaning that Brexit at a certain price was going to happen. It was going to happen, right? We were able to figure out that Brexit was going to happen at 1280 because that was when Swansea voted leave on the TV. Then we used technical analysis to figure out where it's going to go. We know that Brexit is a huge event, so it's going to rocket up. But the most logical target for it to stop at was right here. At this point where this could have made or broke gold. If the Bears had won, we would be talking about gold at the price of like 800. That's where we would be right now.
Wow.
We would be at 800 trying to bring this up. If the Bears were allowed to win. See? This is how much gold has gained in value since I was a teenager. You know? Isn't that crazy? So, if the Bears had won here, it would have been a completely different story from where we are at today. The reason why this was pushed up was because I can't remember, I have to look up exactly what it is, but we had a significant economic event happen around this time, and that just sent gold to the moon. Like, look how long it took for this to climb up, and then in a short amount of time, boom.
Was it the 9/11?
No, it wasn't 9/11. 9/11 was back here.
Oh yeah, it was 2000.
Yeah. Can you believe, like, when I was younger, gold was $250 a bar or a troy ounce? Can you believe that?
Wow. Yeah. 250.
It's crazy, right? And this all started with concerns of the housing bubble. When it all started. So anyway, this is clearly an historic. They used Brexit to push the price up to this historic point, right? This, like, the next time gold somehow, if gold escapes this range, it'll probably do something like this. Once it finally escapes out up, this will probably be the new support. That's where the price tends to flip. If you really think about it, this point of gold is a pivot point because the price tends to flip. Notice how after a struggle, the price will tend to go away from it, right? Then over here, it just straight rocketed down. Every single time it hit that point, it was a significant event. right? So over here, the price tended to pivot. Over here, the price tended to pivot. So this is not only a support and resistance point. This is also a gold pivot. So in all reality, if you really wanted to have a safe buy stop, you would use like 1262 as your buy stop. Just look left. Look left.
Normally, how far left do you have to go?
I'm looking. All right, can you not see my screen?
No, I can see it, but I'm just like how far do you like? Well, let me go back. Let's see. You're looking at years. So you're back in 2012 or so. Maybe a little.
2000. Right now, I'm at 2014, and then I also looked at 2012 and 2011. You know, let's look at USD JPY. This is a very fascinating pair because in my public webinar that's on my YouTube channel, that was the 6-hour marathon webinar. If any of y'all actually bothered to watch it, which if y'all did, bless y'all.
I got it saved. I got it saved. I haven't looked at it yet, but I've got it saved.
Can you send me the link to the video?
Yeah, sure, man. After this, no problem. Okay. Let's look at. I know we're going over a lot of training. The next time we have a webinar, we're actually going to hit live trading. I did give y'all a gold buy signal, but I think y'all missed it, which is fine. We'll get the next one.
I missed things. Yeah, I missed it.
Don't worry about it, man. We'll get the next one.
UJ's been in a cell for quite a while too.
Yeah, I did. Let's see. Where was I? Oh, what was I doing? USD JPY. So in my public webinar, my friend who was live trading with me. Oh yeah, see, like I keep old charts. We sold USD JPY right here, and we bailed because we got scared.
Wow.
This was back when we didn't know any better. When in all reality, we had just held that sell with rich men. I'm telling you, we messed up.
Buy a house with that.
Yeah, dude, we messed up pretty big on that one. But anyway, this is what my friend saw, and he simply was looking at the monthly. You see this giant M?
Wow, yeah.
This is what's going to happen. By the time Bank of Japan finishes with its interest rate decision, it's going to finish the M.
Wow. So
My friend noticed the M forming on the weekly chart about a month ago.
So you're all the way
Right.
down to 8. You're down to 8. Down to 8. 80000.
Yeah.
Wow.
But think about it. Okay. Asia right now is winning the economic war. Let's be real. This is where technical or fundamental analysis validates this claim. Many months ago, like at that webinar, we both discussed that Japan is going to finish this M because Japan is very, very technical. So about a few months ago, Japan basically kept the negative interest rate, right? They kept the negative interest rate. Can anyone tell me why they did that?
No, I can't. I'm not versed on interest rates.
Okay. Negative interest rate distorts economics, and the reason why is because not many people have ever done it before. But the Japanese realize that normally when there's economic problems in the world, that the world tends to like to run to the yen pair. For some reason, the yen pair is seen as a safe haven. The Asians have realized this, and they're using this to their advantage. And the reason why they're using this to their advantage is because they, in return for watering down their currency, with foreign investors basically trying to they're basically trying to buy up the yen because it's supposed to be a safe currency. They trap foreign money so that way Asian money can go into our equities, like our stocks, our bonds, and everything like that. Who do you think won during Brexit? Who do you think won?
Well, was it Great Britain?
Japan won. Japan won Brexit because all of the foreign countries were running to the yen to try to make it weaker by throwing their currency at it, when the Japanese instead went to our equities market. Where do you think? Okay, so our last NFP was terrible, right? Our last NFP was horrible. 38K jobs, right?
Right.
If all of that, if that made the stock market crash, and all of that money was American money, which it was at the time, where did the money come from to fix our stock market in time for Brexit? Where do you think that money came from?
Japan, I'm guessing.
It came from mostly Asian countries, yes. Because at the very same time our market collapsed, the Japanese market strangely went down too. The Nikkei and the others and the Kijken, they all dropped at the same time as NFP. Why do you think that is the case?
All I have to do with the Japan market.
They use that as an excuse to go out and go acquire our money, our companies, our equities, our bonds. They also bought gold. This was back when we were at 1200, like at around 1190, 1200. They bought gold, kept it propped up, and they went into our equity market. How convenient is it that they did both? Now that Brexit happened, the yen seems to be getting stronger. How convenient is that?
Yeah.
They just won a lot of money from Brexit. And you know what they're going to do? They're going to complete the M, and they're going to make their currency worth even more. Because now there's no need for the negative interest rate. The plan succeeded. And they're just going to say that, oh, well, we have recovered economically. When all in reality, they just robbed the markets of trillions of dollars in Japan.
Smart son of a bitch.
If you guys want to succeed as Forex traders, these are the pieces of the puzzle you have to figure out.
Wow.
What did you study to get fundamental? Like, how do you know these fundamentals so good? What do you study? What do you look at?
To be honest, guys, common sense. I know that sounds like a cop-out answer, but it's not. It's common sense. The money has to come from somewhere. If America freaked out and American investors left our stock market, then who was it that put the money back in there? Because money travels, right? So if American investments are looking bad, American money is not just going to throw itself back in there after cashing out. That's retarded. They wouldn't make any money. Does that make sense?
Yeah.
That would be like sticking $1 into a change machine and possibly only getting 80 cents back because you didn't withdraw it in time. It would be stupid. You would instead look for a new opportunity, right? And the new opportunity is in the yen. However, the Japanese are not scared of that. They don't care about their money. There's so much of it that they might as well use it for what it is, monopoly money, right? However, if American money left the stock market during NFP, how come we were able to have a magical stock rally in a month before Brexit? How is that possible? Because by all logic, we shouldn't have had a rally. The rally was fake because we only had a 38K job creation. That means our economy is in trouble, correct?
Mm-hmm.
So where would the money come from to fuel such a where would the money come from to fuel such a recovery so fast? It had to come from somewhere. And it wasn't Europe. Europe's in huge trouble. They have their own problems, and they were battling each other. So logically speaking, the money came from Australia and the money came from Asia, mainly in the form of China and Japan. You guys don't realize that the U.S. economy got played a fool by a bunch of children in China. Like 30% of forex traders and equity traders in China are children, below the age of, above the age of 7.
Yeah, that's amazing.
Jeez.
And basically, it works as follows: Japan gives an order, or makes the plan, and then China is the muscle.
Wow.
The reason why they have to do that is because the Chinese economy hasn't figured out what it wants to be yet. So what they're doing is they're looking at foreign markets and making money from that. Japan is doing the same thing, except Japan's doing it smarter.
So basically, what they did was the Japanese people, they bought out the stock market when we left it.
Yeah, where do you think the money came from? If we left the stock market during NFP and then a week later we had a magical rise and recovery of the stock market, you really think someone's going to put $1 in a vending machine and expect back 80 cents? No, they're going to look at other investment opportunities. Someone had to come in there and put the money in there, and the most logical outlook on that was it had to come mostly from Asia. So how convenient is that now the yen is all of a sudden so strong?
So
do y'all see the logic of what I'm talking about?
So on UJ right here, you keep saying the yen is strong. So I guess I'm misled by some of these pairs. So the USD is weaker and the yen is getting stronger?
Yes. Same thing with the pound and the yen. I mean, how ironic is that both of them are falling? Usually it's only one or the other,
Yeah.
but both of them are falling hard right now.
And they're going to keep on falling.
Yes. Watch. I bet you a week from now, I think a week or 2 weeks from now, Japan is going to piss off the world, and they're going to raise the rate of their interest rate. They're going to raise their rates. They're going to make it go from negative to probably either break even or possibly a positive interest rate. When that happens, that strengthens the currency. So as we're looking here, it is completing the M pattern.
Wow.
Fundamentals and technicals validate each other. You have to have both.
So you're looking at, this is the monthly you're looking at on this, right?
Yes.
So we could be over the next, what do you think, month for this to go all the way down this far? For the
yeah, man. In all reality, my friend and I, okay, so you will see us discuss this on the webinar where we both facepalm. We've discussed this many times over and over again about how we really screwed up on this trade because we already had it figured out.
Yeah. And even at a 0.01 or a 0.02, 0.03, you could erode that and literally made thousands.
This is where we were looking at it, that one webinar, and where we went crap. You know?
Wow.
Okay. Now, how did we figure out that this was going to happen? Because my friend was nice enough to look back to 1998. Oh, look at that. 1998 is also an M.
Yes, it is. Now
how strangely convenient.
I thought in an M though, an M as it completes the second leg going down where it's at now. I thought when it got to the neck down there is when it was supposed to be the best sell on an M, or I guess is it different on a monthly or daily? Daily? In other words, where you just put that mark right now, and then you made the line all the way down. Isn't the ultimate sell on an M down at the bottom there?
Wait, this line right here?
Yeah,
no,
right
man,
there.
You
Yeah.
don't want to sell there.
Well, no, I know, but I mean when you look at because I got some charts and stuff that have an M on there, and they do show the neckline there. Okay, maybe.
Basically, your neckline is like your second chance. It's like your second chance sell.
Okay.
Like if this kind of comes up a little bit, and then goes down, you would want to sell on the neckline, right?
Right.
Or you can be like AUD and cause heartaches and do that.
Well, like straight across on the other side there, it did do that. It did go. It went up, came down a little on this right where you drew the circles just now, down below.
See where you want to be is right there.
Yeah, well, yeah, like, that would be where to be.
This is peasant fodder. This is the same concept that I use on the 1 minute chart. You sell at the top and you buy at the bottom. Simple.
So they're basically doing another M.
Yep.
How do you know that they're basically duplicating that pattern?
I mean, do you not see it filling right here?
Yeah.
Like here is the M right there. There is an M right here. It's even structured kind of similar, almost similarly. Also, this peak, this failed to pass resistance.
Sell at resistance, buy at support.
I see.
Yeah. This is simple stuff, guys. Like, if you look at it right here, if it had gone up to here,
damn it.